going to go to Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you?
Very well, thank you. You'd like
hey,
to look at...
Talk to me about the TVIX. I was looking at the VIX.
Okay.
It hit a 32 round number low today. Which was, it hit that 32 round number low back in
way back,
October,
back in October, right? No, the 32 was in the 32.
Look at 1010 and 1011. It was
okay, yes.
low
So
of
this
both
is
of those days.
So what I'm looking at here. Well, first of all, let me just state very clearly, for a number of years here, I've been talking about the volatility index, and I've used them as numbers. And what I've said is, below the 1516s is very positive. The market should have good, strong upside action, a lot of triple-digit numbers. As soon as it gets to the 16s, it kind of stalls. It has a lot of resistance. And when the that is the VIX index itself, when it starts to get into the 18s and 19s, you've got to be very careful because money is being bought, insurance is being bought. And when it gets into the 20s, it's saying to you that you should see many triple-digit down days, high double-digit S&P pullbacks. And when it gets into the 30s, from the 30s up, that's when you're looking for a climactic turn. The last one was on 26th of December at 36.20. We're now trading at 14.43 in the VIX index. So theoretically, if there isn't any news this week holding in the teens, in the teens, especially going towards the 13s and not towards the 16s, that should be bullish for the market. So have you got a moment, because we've got a break coming up and I'd like to talk to you a little bit more about positioning, etc. Can you hold on?
Yep.
Great. Okay, we've got Mark in Fort Collins. We're looking at the VIX. The Dow just dropped minus 13. Remember what we were looking at in the E-mini here with that cup formation breakdown, hitting the 200-period moving average, making a dreaded H. Now, we're looking at the volatility index, which just popped up a little bit. It made a low this morning at 15.19. It's trading at 14.70 right. Made a low this morning of 14.13, trading at 14.70. This is leg G to the downside. There are so many things that we're looking at right now that suggest if there wasn't a Fed that could really spike the market up or spike it down. I don't know. If the Fed wasn't there today, I'd be very comfortable in looking at the VIX index starting to rally right now. So here we go. I'm going to go straight to the question of Mark had of there was a low this morning at around number 32. When it comes to the TVIX, which is really the volatility index trading vehicle, one of them, a round number, yeah, it's kind of cool because it comes at a low G and a D. It'll be great if it suddenly starts to move, but I'm not going to put any import on that. So, Mark, this is what I would say to you. If you were to prepare right now and you just started a little nibble on the TVIX at 32.31, you are subject to at least, between you and me, we know that it could be a 10 to 12% haircut if the Fed comes out and the market just suddenly skyrockets to the upside. If there's anything that is even a hint of negativity, this market is now at this, right as we're speaking, at 12:31 p.m. Eastern time. Everything has to be perfect right now. There's no room really for error because there's a lot of pricing into these stocks. Most of them look to me like they've gone 3 to maybe even 7% overbought on a shorter term basis. So yeah, they could go higher because overbought means that you can go even more overbought if the conditions are good. So do you ever short before? Do you ever buy the TVX before the Fed announcement?
No, I haven't. I was looking at it. I was thinking of maybe going half in, half a position.
So let's
now
just say,
and then maybe half after, depending on if we get a spike or not.
Right. You see what I'm looking at here is, let's just say instead of guaranteeing that you're going to take a loss if the Fed comes out and the market responds, sacrifice a little bit of that premium right now, because if the Fed comes out and it takes a little while, but all of a sudden by 2:45, you're looking at the Dow minus 50, the S&P down minus 6 instead of up 150 and plus 15. You've got time, because what I think that's going to say is now there could be some kind of a pullback, and don't expect that it's going to be we're down minus 35 at 245. Wow, fantastic, because by Friday we should be down 700 points. I'm not sure this is going to work. There's just too many people that have missed the rally and that are going to keep buying. So I think it's going to be more lower highs, lower lows, lower highs, lower lows. And then suddenly, if it is weak into Friday, it'll be like Tuesday or Wednesday of next week that out of the blue, the market just gets bad news. Boom, there's a very sharp sell-off. That's the kind of way I'm looking at it. So I think giving up a point on the TVIX, a point and a half, I don't think that's such a bad thing, because if it starts to trade in the 35s at any point and holds there for one complete day, in other words, whatever happens, the close that day is in the 35s, I think you've got yourself at least a nice pullback coming up. And then it might mean that the VIX, the TVIX, because there isn't real bad news, it goes up, but it doesn't have that one-day 5-point move, at least not yet, but it'll at least give you a nice cushion. So here's my thinking. If you want, you could even nibble on, and I do mean nibble, I mean nibble because you want to get a real sense of how your position is acting when the Fed comes out. And then later you can do the adding, or you can take it off and say, you know what, if I had a full position, I would have lost 12%, but I've got a little tiny position. It was a risk. I personally would say, rather than take the risk, let's wait until 210 or 230, and you'll get a trade. Not only that, if you do get the trade, the way I'm looking at it now, because of what's, let me go to, let's go to the S&P for now. Let's go to the S&P, and if the S&P at this particular point, which is down just 2, the candles that I'm looking at says that the candle with the greatest support right now, especially with a little bit of a gap, is the open and close of 2743.50 on the 14th. 27, so that's 2740. That's 30 points in the S&P. So if we gap down, all of a sudden after the Fed, all of a sudden the S&P is down 12, you'll have about another 12, and then I think you're looking at support in that doji area, or you're looking at support in the 14-period moving average of 2732. So I think it's going to be a stair step down, unless there's just such, the market just takes this like it didn't need to see this at all. Not only that, we're going to be looking to see whether the Fed talks about rates, so that gold, which has had a fabulous move, if gold pushes up another 20 or 30 bucks from here, that's going to mean that a lot of money is going to start looking at those commodities very favorably, and they're going to start taking money out of stocks. So this is really an important period. And let me just get a little clue here. Let me just see what the dollar's doing. Yep, the dollar's down 19 cents. It says it's still in that consolidation phase. Wow, I think this is a pretty important day today. So I'm saying to you, yeah, you could nibble a little bit, and then you could start adding, or you could just have patience to wait. If it's me, I'm saying to myself, in a market like this, why just in a split second lose 10%? I'd rather have that 10% on my side and say, okay, now I kind of know what I want to do. It's better that way. So I'm in your camp. I'd be looking at the position of a TVIX, but you need the conditions to come together. And you'll know, I think you won't even have to wait till 2:30. I think you can know by 2:10, 2:15, pretty much.
Awesome. Thank you.
So thank you so much for calling. Good luck with the trade. Let me know how it goes.
All right. Bye-bye.
Thank you. Bye-bye.